Friends, in this video for I Thought Wealth, I am going to talk to you on the topic consensus, consolidation and time correction. When do we see consensus? When all of us agree on something. Who all need to agree? Virtually everybody, starting from the retail investor to the analysts, to the Twitterati, to the fund managers and to the HNIs. Everybody must agree on a view. The view could be on a theme or about a company's potential or about buying a particular investment. When everybody agrees on something, then a consensus opinion is said to have been formed. What happens when a consensus opinion is formed? Those who receive that opinion tend to view it more favorably because they are hearing it from many places. They are hearing it from a diverse cross section of people. They are hearing it from people who deploy money in the markets. They believe that the view comes from those who have adequate skin in the game. So, a consensus view carries heft, it carries the weight to convince all those who are yet to be convinced. So, those who are waiting to be convinced receive consensus in a way which convinces them, right? What do? We go and buy consensus ideas. In every market cycle, people tend to buy consensus ideas or sell consensus ideas sometimes when everybody thinks selling is the best thing to do. When everybody thinks buying is the best thing to do, then they buy. So, when consensus emerges, the tendency amongst us is to act on it, to receive it favorably. What happens after that? Let's look at recent history to understand what happened to consensus trades. First, let's take a trade which has had mixed results, the one on the APIs. Last year, it was believed that the best way to play pharmaceuticals was through the APIs. Nevertheless, a few companies have lived up to the consensus for the simple fact that they have grown so much in market cap that institutional ownership is imperative, nobody is willing to sell, and there is a very strong retail following which is supporting the consensus view. So, the consensus is so strong that in a handful of API companies, you are seeing the consensus leading to a slightly elevated investment performance. But amongst the other companies in the same team which do not have the same market perception or presence, consensus has gradually withered away. So, in the case of the API team, there is a divergence of behavior where 2 or 3 companies have actually performed and the rest are not really doing what they believed would happen. That is not the case with 2 other themes which have seen consensus in the last 1 year. The first one is the FMCG theme. You saw that everybody said that in 2020 FMCG was a no-brainer. You could buy it because consumption had not stopped, people were still spending, the lockdown was not affecting FMCG. So, FMCG would continue to keep doing well for a long period of time. However, what has happened after that is that FMCG has gradually gone into a time correction, and it is a phase where people are still holding on to their conviction, hoping that something good will happen. Effectively, the stock price has been range bound. It is not ceded all the gains it made last year, but it is not held on to the whole thing either. So, it is gained a lot, lost a bit and just holding on there. So, nothing has happened after consensus, despite the fact that everybody agreed that this was a great space to invest in. Usually, when everybody agrees that a particular space is good or a particular stock is very good to invest in, that consensus leads to everybody who needs to buying that stock. Afterwards, there are no new converts. Effectively, the stock is being held by people hoping that it will move in the direction it is expected to move, but the stock does nothing. It goes through a long price correction. So, it stays in the same place and you find that people are waiting for something to happen. So, effectively the consensus is always followed by a time correction. In that phase, your conviction tends to be tested. You are wondering whether you have done the right thing because the stock does nothing for a long period of time. You are waiting, holding for something good to happen. Gradually, you start wondering whether you did the right thing. And when more people start questioning whether they did the right thing, the stock begins to correct because some people run out of patience and start selling the stock. So, the fact that people buy into conviction, buy into consensus and then hold on for a long period of time in a time correction also means that someday they are going to lose their patience. And when they lose their patience, they may start selling. And when more people lose patience, that consensus begins to look weak and slowly the stock price moves down. So, this is something we have seen in a number of companies. It is very important that when you see consensus, the performance of the company after consensus must exceed investor expectations, otherwise it will tend to time correct. When it exceeds investor expectations, then more people become more convinced of the stock and start buying it. That has happened in a handful of companies, but when we see consensus, if 5% or 10% of the companies outperform even the consensus view or expectation, the rest generally struggle to keep pace and match the expectations of investors. So, effectively chasing consensus is not really a smart thing because afterwards you are going to have a time correction and then you may well have even a real correction. So, that in essence is what we see often in consensus trades where people believe too much in an individual stock or in a theme or in an industry and then wait, lose patience and eventually lose their conviction. The consensus gradually tends to wane away. If you like this video, do share it with your friends who believe in buying what everybody thinks is the best place to invest in so that they understand how they can prepare themselves for the journey after they make their investment and how they can manage it better. Thank you very much for being a part of this journey. Do stay the course with us on iThoughtWealth. Thank you.